So the goal is to do things over the long run, and I was thinking about this morning in terms of what happens typically with a lot of people that are doing, investing, I guess, would be the term, but investing sort of broadly in anything, whatever that is in your life. And a lot of people sort of play this kind of game where they go for short run things, and they don't realize that most of the time those things don't work. I actually want to talk about that today. So if you don't know me, I am Professor Dave Massac. I'm Associate Professor of Innovation Strategy and Entrepreneurship, and I created this whole Reciprocity Project to give back as much as I possibly can. There's so many people that help me out that I want to pay the favor forward to help you out as much as I possibly can. So most things, they don't work like what you think they actually work, and we do a really poor job of educating people on this. There's actually, most things in life actually have what is called a Pareto distribution, where there's an extremely long tail where there is one or two winners of something, and then most of people that pursue those things actually they do, maybe moderately well to like poor to moderately well. And so what ends up happening is, the vast majority of the people, 98% are doing kind of meh, and then there's a couple that do very well. And so what ends up happening is that we end up seeing those couple that do really well, and then we try to mimic those particular things, which pull us into very risky sort of behaviors and doing very risky things, right? So you see this a lot right now with what's going on in the NFT market and cryptocurrency and things like that. Those are very, very risky ventures, very risky ventures, because they could go either way. And the people that sort of win these things, they, quote unquote, win these things, and they do very well. They might sort of flash what they're doing, buy a fancy car because I made $1 million or whatever, or they sort of leak those stories and then become sort of popular culture, or somebody interviews them and says, how did you get to this thing and sell this thing for $8 million, whatever, an NFT or whatever it is. And we see it time and time again. That encourages a tremendous amount of people to pursue those things. It's a gold rush. Right, pursue those things, and they tend to be very risky, and they don't really perform that well. And instead, what you should realize is that, most things actually have this Pareto distribution, and pursue it as if it has a Pareto distribution. So do things, moderate over a very, very long time. And if you do that sort of moderate strategy where you're investing, so I personally think, I heard anywhere 10 to 20%. So, rough estimate, 15% of your total income goes into index funds or something very broadly diversified. And if you want to get into cryptocurrency, which those index funds are going to be investing in that anyways, because those companies are looking at that kind of stuff, which is broad-based, all of the stocks in the stock market. What you could do is get a little bit, like $100 in cryptocurrency or whatever, and you just play that every year, and you get another $100 and another $100. That every year, not all at once, and because it's so risky, it's such a high risk endeavor. If you want to do that, I don't do that. I probably won't, because I have faith in the stock market that it's going to actually, those people are really smart, and you are taking advantage of very smart people by doing that. So we just invest in really good mutual funds broadly, and that's it. And we do that day in and day out, day in and day out, and we do that for over years and years and years, decades and decades and decades. And what you're looking for is a sort of, by doing this, you're diversifying that risk. That's what it's called. You're diversifying that risk, and you're slowly growing your wealth. And by doing this, you're minimizing the extent to which something crazy happens, because it always crazy happens, right? So that's what ends up happening, is that, so you hear about the very successful stories, right? That one sort of fishing story where somebody caught this really big fish, but you don't hear about the hundreds and thousands of people, hundreds and hundreds and hundreds of thousands of people that have tried these things and they go bust because they're ashamed, that they don't like to speak openly about it and all those kind of things, and they're never going to tell you unless you're sort of really cautious, or if you're a confidant, they might tell you that they lost all their money by doing this kind of stuff. So people either do very ultra conservative at that point, or they just stop doing it altogether because they sort of are afraid of doing that, and then they end up getting themselves in a pickle. So what I'm suggesting is to do things moderate and do that for a long time, to take advantage of every once in a while. If you do this for a long time, you can bet that most of the time it's going to be like meh, it'll be kind of like normal. And every once in a while you're going to take advantage of something that just goes crazy, and that's how you actually take advantage of these returns that possibly could do well. And you don't know. The problem is you don't know when things are going to go crazy. You have no idea to predict it. It is very challenging to predict any of these kind of things. Very smart people devote a tremendous amount of resources trying to predict these things, and they can't. And so you have to realize that you cannot beat the market. You're not smart enough. Nobody is smart enough on their own. So if you do beat the market, quote unquote beat the market, it's because you're lucky. You just got in a very fortunate position, and things just worked out. And if you don't believe that you're missing out on looking at all the sort of challenging things that happened to get to the point where you actually had extraordinary returns. It's called the fundamental attribution error. And so there's just lots of stuff that goes on behind the scenes. I just go slow, steady, day in and day out, be boring, and that's it. And then if you do that for 20, 30, 40 years, you'll end up being rich. There's like no doubt about it. It's what we know. This is tried and true. Anybody that teaches anything else is just out to lunch. They're trying to get your money at the end of the day. So that's it. Take care. Have a wonderful day. All right. Bye-bye.